Welcome to Money Convos, where we discuss personal finance and investment tips. We're committed to helping people create wealth and achieve financial freedom. Follow us on Twitter, Instagram, Clubhouse, and Facebook, and subscribe to our YouTube and podcast. All right then, let's head into today's conversation.
And before we get started and dive into this conversation about investments, I just want to remind you that any information we share here does not constitute investment advice. We all have unique financial situations, so if you are thinking about investing, please consult with a professional investment advisor who can guide you on your personal circumstances and your personal situations. And so the background for today's conversation, there's been so much unpredictability in the markets, economic fluctuations, geopolitical tensions, and it's been going on for a while. So even as an investor, as a seasoned investor, you can seem nervous. Okay, where should I put my money now? If you're in Ghana, you would have probably experienced the DDEP, where bonds were exchanged for other bonds with longer tenures and then lower interest rates. And so the sentiment on the market is not really great. Options are limited. And so the question comes up once in a while, or almost all the time, where do I put my money? And that's basically the background for this conversation. So we will keep it light, we'll keep it simple, but make sure we cover some traditional investment opportunities that the average Joe can look at to invest. The market may not be great right now, but it doesn't mean you should stop investing, Things will not always be great, but you should always plan for the future. And so we could start by looking at some traditional investment opportunities. And first up for me, and maybe I would have taken one option of Adam's table, would be stocks. And I know what you may be thinking, that stocks, the Ghana stock market, if for those who follow it, it's not too liquid. And I understand your sentiments about it. But you can't build a reasonable portfolio without stock, I must say, especially if you are in the market for a long term. I see stocks, and it's been proven over the years as a good way to build your wealth over a long time. And although they are very volatile, there are other market instruments also that can help you invest in equities or stocks without a full exposure to one company's stocks, like ETFs. And so stocks are a very good way for you to invest in as an average Joe, as someone seeking to invest for the first time. It will be good to test the waters with some of these traditional investment opportunities and see how far you go. I don't know whether you have any thoughts on stocks, Adam, whether you've invested in some before, how it went, whether good or bad. Please let us know.
Oh, I have. I have invested in the stock market, both indirectly and directly. Some didn't go too well. Like, I think it's one of the investments that I really do not track as much as other things because of the way it can. Even in the Ghana Stock Exchange is not so reactive to news like elsewhere. So yeah, I have the. Unfortunately, I was holding shares in UT Bank that was listed on the stock market before it went. Their license was revoked and they were now pushed under DCB. And we shareholders don't know what happened to our shares, but we are inside. Yeah, so that's one bad example.
Yeah. So, the part you said about the Ghana market not being so volatile, it's true. Our market is very slow compared to other markets. But the advantage is now a lot of investment houses are being open to providing investment opportunities that help you invest in other markets which are more volatile. And so we wouldn't want to mention them here because of some reasons, but you should check with your investment house or your bank or wherever you invest to see whether some of these opportunities are available. They always say if you don't ask, you won't know. And so check to see, because I think it's obvious, quite obvious, that the most liquid equities market in the world would be the US market. The equities are very volatile, also very unpredictable, because a singular news item could push your stock up or down. And so it's very volatile as well. It comes with risk. When it rains big, it rains big. When it goes down big, you also lose big. So it's very volatile for people with high risk appetite. And so if you're interested in some such opportunities, please reach out to your investment house, your investment advisor, ask them if some of these opportunities exist, and see how you can also help yourself. Another investment opportunity that we mentioned earlier was bonds. Here in Ghana, we've had a very hard lesson, we were taught that bonds were a safer bet to stocks because, especially government bonds, they are a safer bet to stocks because government will never default. Or at least that was the thought until DDEP hit us in 2022 and the mayhem that came after it. But bonds in itself are a really good instrument to invest in. What are the importance or the benefits bonds bring to an investor? One, it's a source of reliable income to you because you get interest payments either quarterly or semi-annually. And two, you practically get your money back at the end of the term. So it's for a fixed period of time. You earn cash flows every single year. And at the end of the period, you earn your money back. So for people with low risk appetites, people who would like steady flow of income over a period of time, bonds are not just are a good option for them to do just that. But government bonds have become very hard to trust in our market, although other markets are flourishing. But in our market, it's become very hard. Adam, I don't know whether you have any thoughts on the government bond issues in Ghana. I know we've discussed it countless times on the show, but do you still think they are a good option if and when the market rebounds for prospective investors?
Oh yeah, I think government bonds are still or will still be a good option when the market stabilizes. Even for now, the exchange bonds that the new bonds that were issued in exchange for the old bonds, I think for most of them, they will start getting more liquid. I think some of the coupons have started coming little by little, and I know next year a bit more will come, and then subsequent years. So eventually when things stabilize and things get better, I believe that it will still be a good option because they serve as a source of income, like you said, regular kind of cash flow. And for individuals too who need this kind of vehicle so that they can invest and then receive some cash flows at a certain point in time, it will be a good option still. Because even most of our mutual funds have exposures with government bonds. So you see that it's a big issue. That's why when government defaulted or did the debt exchange program, it affected a lot of people. And it was not just about people who were directly involved, but even those who were indirectly involved in terms of purchasing fixed income mutual funds or even some equity funds which had some portions of government short-term or long-term bonds in them. So it's a good option. I mean, even though this thing happened, we are just hoping that and believing that this will not be a regular occurrence, but it's like what they say, a black swan event, which is it's something we are unexpected and we don't expect it to repeat itself anytime sooner. So it might still be a good option to look forward to. But just that this time around, as as investors, when we are going into this, I think we will now have better understanding of the kind of risk we are taking when we are investing in government bonds, because hitherto we're saying that, oh, they are risk-free, so risk-free, virtually no risk. And here is the case, this type of event happened. And now we saw that, yes, even though government is supposed to be a credible lender, supposed to be a credible, borrower, a credible borrower and a credible place that we can invest in, there's a possibility that this kind of thing can happen. So when you are putting your money in there, you have that in mind, and maybe you will not also focus all your investments in that direction. And then when this unfortunate type of incident occurs or something similar occurs, then you'll be found wanting. So I think despite what has happened, when the market stabilizes, I believe that it will take time anyway, but I believe that it will still be a good option. It's just that for confidence to be built in the market again, government will have to do more to prove itself and to try and win over investors to put their money in this type of vehicle. Yeah.
Yeah, excellent points mentioned there, Adam. And I think I should quickly chip in the case for corporate bonds as well, because since the DDEP, you would see an uptick in the uptake for corporate bonds. Corporate bonds, unlike government, are a type of debt security issued by companies to raise money. So essentially, instead of giving money to the government, you are rather lending to a company. And these are also high risk, but they also give you a steady cash flow, just like government bonds give. And so one may say, okay, I'm invested in all that you've mentioned. I'm invested in stocks. I want a little bit of stocks. I want a little bit of bonds, both government and corporate. Where do I get all these? And you would remember Adam mentioned mutual funds. That's where mutual funds come in. And again, you could speak to your investment advisor or investment house and see if they could provide this service for you. So mutual funds, essentially, how do they work? They pool money from a lot of investors like you and invest in a diversified portfolio of stocks, bonds, and other securities. Although you may not have your pick of choosing the companies you want, but it's a great way to spread your risk. Unlike investing in one stock or one bond where you are your risk is really high or really tied to the company's performance or that specific stock's performance, mutual funds, because they pool money from a lot of people, you're able to spread the risk. And maybe they may be a high performance in stocks, but bonds may be underperforming. You never know. The uptick in the performance of stocks could offset the downfall of the bonds. And that's how mutual funds balance their performance. And a lot of mutual funds in Ghana have been performing well. And so if you're interested, you could speak to your investment advisor, as mentioned earlier, or your investment house, see if they have these options available. And you could also hop on it for investors looking for stable or steady returns and who also have a low risk appetite. This is also a great opportunity for you to invest your money and not let your money stay idle. Adam, we are venturing into a part where I think you have more expertise on real estate. And for me, I consider real estate to be, especially in our market, a very stable investment, because if I use, say, a couple have a piece of land, right? And in a very prime area in Ghana, and they're able to, through a couple of years, able to build something like a real estate apartment or a chain of stores on them. It's a very stable way to generate some income even after they go on retirement, because this is rental income. You haven't sold the apartment, you haven't sold the chain of stores, you are gaining rental income every 3 years or every 5 years, or however you may structure your agreement. And so I think they're also a very good way to invest that people really underrate. I don't know your thoughts on that, Adam. Since you have the real estate background, maybe you could shed more light on that as well.
Well, I'm more into construction than real estate, but I think I get what you are talking about.
You are manifesting. You are manifesting.
Well, but I get where you are coming from. Yes, real estate any day in most countries is it's a good investment, and it's just that it's capital intensive, and for a lot of people who are now starting off in life, getting that chunk of funds to invest is quite a lot. So for individuals, probably unless you are a high net worth individual or like you are getting a certain kind of money, and you also have to balance your expectations very carefully because I do a lot of construction and costing for construction projects, and they are quite expensive, especially in our part here because we import a lot of the items that we use for construction. So if your timeline, you don't watch your timeline particularly, it can be a problem because you see that some people have short-term funds and they push it into real estate projects. And you see, before you will start seeing or reaping the benefits of maybe a project like that, it may take some time because the construction process can be bedeviled with a lot of issues. In fact, I will even start from the land acquisition and the issues that for us who are in Accra, we understand the challenges that come with land acquisition. Even when you have legitimately acquired it, how you will keep it and secure it so that it remains yours is another battle, And then when you start construction, you have to deal and battle with people who are coming for dignity and coming for this and going to do that and all of that. Then you also be battling with people who are also pilfering, who are stealing your materials or whatever. All that is there, So if you want to directly be involved in it, it's quite tricky. But eventually, because of all the risks that are also involved, the rewards too are also likely to be, or expected returns are also likely to be much bigger because the risk you have taken is big. You see, so it's you have to consider and weigh everything and ask yourself whether it's worth the risk that you are putting in. But I think for all those who have raised, a lot of people who have also raised and targeted, and location is also very important, and targeting the kind of market you are looking for and getting whatever you want to get out of the market is very, very important because there are people who have also built very big luxury properties out there, and then occupancy has become an issue. Even if you look at the malls, for example, they're basically targeting some kinds of returns, but you've seen that they've changed hands a number of times. I think recently I heard about the owners of Accra Mall and West Hills and whichever one. They've sold it to another because you see that a lot of them come in and they realize it's not as simple as that because the projections they make sometimes are over ambitious. So I would think that if you are going into something like that, you should properly research and then also minimize your kinds of expectation of so high return. But I think that, like you're saying, for the average Joe, if you're able to raise this capital and invest it in strategic things, areas, you should be able to make some decent returns that could help you, especially maybe if it's in terms of some cash flows at a point in time, maybe when you have gotten into retirement and you have a number of rental properties that are bringing in some cash flow. It's also good. But you have to also have in mind that it's a lot of work. Even if you have a number of properties, maintaining them and then administering those properties, managing it, it's a lot of work if you want to do it yourself. And if you are going to employ a property company to manage those things, then you know that then that also goes to eat into the kinds of margins you are thinking about getting. So it's not a walk in the park. It's not something that, they say, if you build this thing, no, it's not that simple. But I think it can also be rewarding. But you just have to have it in mind, the kinds of risks you are taking and plan towards how you can mitigate some of the risk. And I think it might be rewarding in the end.
Yeah, it's a lot of work, and a good way we could have avoided all the stress that comes with owning these properties or putting them up would have been if we had a very established capital market with more real estate investment trust for people who want to avoid all these challenges to just invest their money in a fund that invests in real estate properties. But I think from the last time I checked, we had just two. I will just confirm that in a bit. So I think we have one from Republic Rates, and one from Sentinel. And these are just two in the market. And so, of course, you could also speak with your investment advisor or investment house to see if you are really interested in investing in real estate investment trust. You could speak to your investment advisor or house and see if you could have opportunities to invest in some of these funds as well, because they are also a good way to invest without the many challenges that Adam mentioned, with having to put up with the property and managing and avoiding all the stress, just putting your money in the fund, letting the fund work for you. And so, yeah, from the real estate perspective, I think you can speak to your investment advisor to see if you can get into the rates on the market. And also another option, a very good option that we can't go without mentioning, is fixed deposits. And there are non-bank financial institutions in the market that allow you to place money with them and offer you some returns with 91-day, 182-day, and then 1 year durations. And they are a bit popular in the market. Banks also offer them as well, and they are still going strong, Adam, I don't know whether you've personally, I have not invested in fixed deposit before. I don't know whether you've invested in them, your experience, if you have anything to share.
Yeah, I have. Like, I've experienced a number of things before. I had, when I first started investing, I didn't understand some of the things, but there were these fixed deposit products that were being offered by some investment houses. I won't name the name of any of those, but if you quite remember, the SEC had to come out to issue a directive concerning guaranteed return, and that was the whole game changer at that time, where people were supposed to actually rather operate more of mutual funds than to be guaranteeing return. So I did invest in one such fixed income from an investment house, not a bank. Fixed deposit, from an investment, not a bank. And I almost had a big challenge, because the moment SEC issued that directive, if you remember, there was a rush on a number of the investment houses. A number of them too had their licenses withdrawn and all of that. So it caused a whole lot of confusion. So I ended up getting something that it was supposed to be a 91-day something that had been rolling over for about a year or two. And now I said, oh, okay, let me go and get my money. It took me almost 2 years to get it after that. So it brings back to mind that we should be very careful when we are having these kinds of investments, especially where returns are promised. Okay, and that is only these banking institutions that have that kind of leeway to do that, where that fixed deposit. And normally the returns are not so much. Fixed deposit interest rates are quite low, not very high. But you see that lots of these investment houses or microfinances and other places had very, very attractive returns. So people were putting their monies there, So it's very, very important that we watch the terms. What are the terms in terms of interest rate? And then make sure that you watch the general market conditions. If T-bills are doing about, let's say, 21 or 22 or 23 or 24%, somebody's offering about 40%, you should be quite wary and looking at 40%. Don't just look at the fact that it's promised a 40%. So, if I put 1,000 cedis, I'm getting 400 cedis on it, or something like that. Simple calculation. Don't just look at that, but think about it more broadly. But fixed deposits are also a good source of investments where you can put aside some chunk of money that you are not in dire need of it, maybe in a short time. Maybe normally they are like maybe 3 months, some even 1 month, 6 months, or whatever. And then you can put it there and get something on it rather than it just sitting in your account and not getting any major returns, just so that you can preserve your money and the worth of it. Yeah.
Yeah, very good points there mentioned, Adam. And I think the part about always trying to do your due diligence before you invest is very important. Not all that glitters is gold, and most of these returns on these instruments, they always try to match or beat the treasury bill rates in the existing market. So if it seems over an extreme, you should be very careful. You should always do your due diligence on the firm offering it. You should always try to talk to someone someone that has the expertise to talk on such matters, so that you don't become a victim of a few of the incidents that have happened in the market where you invest and a lot of issues come with redemption and all of that. So fixed deposits, as been mentioned, they are a very great option for you, but always remember to do your due diligence, speak to your advisor or your investment house, assess things by yourself, which you can, and see which options are open for you. And so I think a good way to end this conversation would be, okay, we've now covered the options, right? What are some tips that can help us navigate these uncertain times? And we've mentioned them in our conversation, but I think it would be very prudent that we go over them. So the first tip from me would be to assess your risk tolerance. You would remember that we mentioned some options for you, which are stocks, bonds, mutual funds, rates, fixed deposits. This list is not exhaustive, but we are limited by time. And all these instruments have different risk profiles. Someone could say stocks are more risky than bonds because of volatility and all of that. And mutual funds have very low risk because they are diversified. So all of these instruments have their varying risk profiles. What you can do as a prospective investor is to assess your risk profile. How willing am I to part with this money if things don't go well, if things go upside down? That question will help you answer your risk tolerance and then decide that, okay, I've realized that I'm not really willing to part with this money. So let me go for something low risk, although the return will be low, because high risk, high return, low risk, low return, So let me go for one with low return, which gives stable income over the long term and plays safer, And so I think a very good tip before you invest would be to assess your risk tolerance and also assess how much you understand these instruments. Always make sure you understand what you are investing in. Ask for a regular statement from your investment house or advisor. Assess things for yourself. Ask all the questions you need to ask to understand where your money is going into. And the most credible ones always have answers for you. They always have their doors ready to teach you what you want to know, to make you know where your money is going. And little by little, you will build stable income, although it may not manifest in the interim, but over a long period, you would have invested a lot of money and then made stable returns. I don't know, Adam, whether you have any tips on your mind as an investor. Should I call you a seasoned investor? Because you've invested in so many things.
I don't know about seasons, but we're all learning. We are still learning. But I think, like you said, knowing your risk tolerance and then sticking to a plan, I think it's very, very important when you stick to a plan. And you see, another thing too is also not to panic too much, because sometimes when people panic, it causes we are not able to think through things very clearly as we ought to. So we end up taking knee-jerk reactions. But we should also have in mind that as long as night follows day, there will be ups and downs in the markets, and there will be changing scenes. There will be times when you would see that inflation rate will be low, and probably the stock market might be booming or something. You can have times where bond prices are very good. We will be making good returns. And then out of nowhere, before we realize, things will go south. So it's all part of the cycle. I mean, if you've studied a little bit of economics, you know that there's economic cycles. So we have these type of things happening. So when it does, I think we should just still stick to our plans, tweak them here and there, make some small changes, but all of that should be informed decisions we should take. Speak to the people who understand these things, and then work with the kind of advice we get from our investment advisors. And then also, as we work on that, let's not chase after one tomb of like some kind of returns, because they say, oh, now investments in Ghana are some weight, but you are hearing some online app or something that is promising some returns that don't make sense. Be careful, because in times like this, money is hard to come by. So the little you have that you want to even put aside and save or invest, you should really think through and invest properly before you put your money. Think through and research properly before you put your money there, so that you don't end up being beaten twice, where you are being beaten by the cost of living crisis, and then you are also losing an investment because you have put money in an investment that is so risky or was a scam to begin with. Okay, so it's very important that we spend time to research and also look into it, check the backgrounds of these companies, and make sure that wherever you're putting your money, it is a licensed institution. If it is a bank, make sure it's licensed by the Bank of Ghana. If it's an investment house or investment company, make sure that they have a Securities and an Exchange Commission license to operate the particular product that they are offering you. Yes, because we realized that some people had licenses, like, oh, they've been licensed as investment house or whatever, but then they are offering some products that they are not supposed to be doing. So let's check and go into these things very well, so we don't lose our hard-earned money that we have struggled to get in these uncertain times.
Yeah. And I think it just jogged my memory. Something Ramit said in the last episode of How to Get Rich. Your investment plan is more important than your investments. And so it's very important to plan before you invest, A good way to start, stay informed. There are a lot of financial news which are being shared every day on social media platforms, Twitter, LinkedIn, Facebook. They always come in. People, we have some investment houses sharing market analysis. We have podcasts covering market news in the US, in Europe, in Asia. A lot of things happening in the market. It's hard to stay afloat or stay on track, but you can start. You can start from the very bottom. Read something small. Talk to your advisor on whatever you don't understand. Try to stay informed, Try to make a plan with your advisor, understanding everything that's included in your plan, understanding everywhere they are investing your money, and then you'll be good to go. And another very important point you mentioned that also stuck with me was the point about the emotions. Not letting emotions drive your decisions. It's true. It's easy to get caught up in the excitement of a market, of a booming market, to say. And when there's a market downturn, there's always panic. We saw what happened in DDP. A lot of mayhem, But sometimes when you're too emotional, of course, our money is our blood. Blood is money, or whatever they say. But, emotional decisions, they often also lead to poor outcomes. So it's always good to remain composed, I think the more popular term would be down ball, short passes. When things are not going well, just stay calm, go back to your plan, see how you can adjust things for yourself, because that's what people who want rich lives do. They don't panic when there's a downturn. They just sit down and see alternative ways they can invest their money or move their money somewhere or do something to recover from such a situation. So always remember to not let your emotions drive your decisions. And I think on that note, please, when you get to Instagram, before you even go to your reels, go to your search button and search for investment_friend. And there, although on Money Convos, we talk plainly about personal finance and investment and have these very exciting conversations. With Investment Friend, we help you deep dive into some of these plans we are talking about, whether it's saving goals, whether it's investment goals, whether it's staying informed on what's happening, what's trending in the Ghanaian market, in the US market, understanding the tidbits, the little terms when it comes to personal finance and investment. Investment Friend has it all for you. So make sure the next time you visit Instagram, before you even go and watch your reels, go to your search button and search for investment_friend. You can also send a DM with any questions that you have, any concerns. If you want to book a session, you can also book it there. And then you can get your journey started on your way to financial independence. And as we've discussed all these multitude of investment opportunities, please don't forget that the greatest investment you can make is in yourself. So we said this last week, whether it's through your education, improving your skills, taking care of your health, the little things you do for yourself, it all pays in the long run. What is the use of investing your money somewhere when you're not taking care of your health? So always make sure and remember that the greatest investment you can make is in yourself. And if you found this episode helpful, please share with your friends and family. And also follow us on YouTube, Spotify. You can go to Spotify and play back this episode as well, or wherever you listen to your podcast. And next week, we'll be back with a very exciting topic as well. So stay tuned and we will see you next week. Thank you very much for joining in. Stay strong, stay firm, and see you next week. Bye-bye.
Thank you for taking the time to listen to our thoughts. I hope you learned a thing or two and start practicing. Don't forget to follow us on Twitter, Instagram, Clubhouse, and Facebook, and subscribe to our YouTube and podcast. Do tell a friend about Money Convos so we all become wealthy together. Talk to you soon. Bye.